Hi girls, welcome back to another episode of Girls Like Me. Today we have the lovely Ella in the studio. Say hi, Ella.
Hi.
Ella is a financial consultant and an insurance expert. So I thought this would be a really, really good episode for you girls because a lot of the time when it comes to entrepreneurship, business, that kind of thing, like everyone is always asking me these kind of questions. And I just feel like your credit score, like who doesn't want to know about credit and that kind of thing? Like if you're a girl with your brain switched on, like you're about your credit score. So yeah, talk to me, Ella. How did you get started into insurance first? So
Okay.
talk me through that process.
So, to be honest, it was not too long after I had my son.
Okay.
I had an insurance policy in place already, life insurance, needed to update it because I
Okay.
had my son. And then saw someone online, friend of mine, and was like, oh, wow, this is an actual thing.
Yeah.
Like people sit down and talk to you. I thought it was just, go on, compare the market and of course, at that point, I only knew about life insurance as well.
Yeah.
And I thought that was the only thing that was available. So yeah, so basically updated my own policy. I was self-employed at the time, working in marketing, working with small businesses. And they said, you should join the industry. It's a self-employed industry. Just give it a go. And I just thought, oh, well, you know what? It's a really nice way to like sort of upsell to my clients. I'm
Okay.
managing their marketing. Let me do their public liability
Love
and,
that.
professional indemnity as
Yeah.
well. But then to be honest, the minute I got into the industry, I thoroughly enjoyed it and I've never looked
Did
back.
you?
Yeah.
Do you know what? I always think that because in my mind, I'm just thinking this must be a bit boring, but you sound like you actually really enjoy what you do.
Yeah, I do. And if you had said to me when I was graduating from uni or in college or whatever, you will be working in finance and you'll be thoroughly enjoying it, like I would have bet money that would never have
Never have happened.
happened.
Because before we just started the episode, you actually just said that you studied fashion at
Yeah,
uni. So that is a mad switch up, like
I know.
fashion to insurance. Like how did that?
I think, like I said, so when I was doing marketing, they were predominantly fashion brands, small
Okay.
brands that were online, had an online basically visibility that they were trying to sort of extend. And that was kind of where my forte was. And then, like I said, it was just a thing where it was like, add this to your. I was just thinking I was upskilling.
Yeah.
And I remember having a conversation with my mum, like, I've got X number of clients that I'm working with. If I'm able to support all of them, fantastic. Didn't even think of anything beyond that. Did the training, thoroughly enjoyed it, and then
Just took off from there.
yeah.
So what was it that you enjoyed about it?
I think it resonates me quite deeply. I had an
Okay.
uncle that died when I was about 5 years old.
Okay.
And if you think of the statistics, typical 30-year-old black man living in South London, he's died. But the one thing that he had in place was life insurance. And he didn't even have life insurance in place specifically for his mortgage. His partner had a mortgage at the time. So he had sufficient
Okay.
life insurance to take care of both his partner, the mortgage, and his son.
Okay.
And that so when I then got into the industry, studied it in depth, understood the different policies, I was just like, okay, wow, this is a big deal.
Yeah.
And so that story immediately kind of came back to me,
Yeah.
resonated. And then to be honest as well, it was a blessing and a curse. I moved into the industry at the point of COVID. So
Okay.
of course everything shut down. Everyone had to go online.
Yeah.
That was my
What
skill
a
set,
good
was marketing, wasn't it? So
time.
I just carried on showing up online, talking about it. And I remember I did this one Instagram live with like one of my closest friends, Tia Ward.
Yeah.
And she used to do a lot of blogging,
Okay.
influencing,
Yeah.
blogging and things like that back then. And she was like, Ella, we need to discuss this online.
Yeah.
People need to hear this. And honestly, like my DMs went crazy. And then
It's so true though. It is something like, when you say, oh, it's the boring stuff, but now I'm getting older, I'm actually thinking
the boring stuff are exciting now.
this is exciting. You need to learn this kind of stuff. So one thing that clicked with me as well, you just said you had life insurance when you had your son. So how
Yeah.
old was that?
So I was 20. Well, I bought my first property when I was 25, 26.
Okay.
So I had life insurance to cover my mortgage.
Yeah.
And then it was through then having my son a few years later that I was like, oh, okay, yeah, the mortgage is paid off, but then what would happen
Yeah, to your
him? Do I
son,
need to
yeah.
add him to the policy? Literally had no idea.
Yeah.
And then it was only until I understood, oh, okay, so there's insurance to cover the mortgage, which I knew about.
Yeah.
But then there's insurance that I can, put in place to leave behind for him. And then there
Mhm.
was critical illness, and then there was income protection, and Yeah, so it was a whole, I was blown away when I understood what was actually available.
Yeah. Okay, so talk me through it then, because you mentioned a few different types there.
Yeah.
So let's say I got you on this episode because number one, I feel like how we mentioned the whole financial literacy, building wealth, those kind of things. These are
Mm,
key areas which people really, really miss. And I
yes.
feel like if you're someone like I grew up around no one had a business, no
Mhm.
one talks about money. So I'm
Mhm.
half Caribbean as well. And I grew up with my mum who's Caribbean.
Yeah.
It's not really spoken about or
Yeah.
like wealth or this. And I feel like now I'm older, um, and I'm watching people pass away or what's happening with this house, what's happening with this estate, I
Yeah.
feel like I want to just get this information now so that when I
Mm,
do have my own kids, and like my younger sister, she's just had a baby as well. So it's
yeah.
like setting stuff up correctly. You
100%.
want to learn. So for someone that's just completely new to this,
Yeah.
what do we need to know?
I would always start, my first and foremost is always income protection,
Okay.
because income protection is the policy that covers your salary
Okay.
ultimately. And if we think about it, if we don't go to work and we don't earn money,
Yeah.
we are our
Because
income.
statutory sick pay is not really doing anything
Right?
at the
Like,
minute.
I think it's recently just changed and it's about 101 per week. But I mean, what's that buying?
Yeah, it's not nothing.
It's not paying for anything.
Yeah.
So for me, that's always number one. And also because income protection is kind of the one policy that does everything else as well.
Yeah.
So the logic is that you're earning a salary, and it can be for those who are unemployed as well. But
Okay.
majority is you're earning a salary. Naturally, if you don't go to work, you only earn statutory sick pay. If you are entitled to sick pay, it's for a limited period of time as
Yeah.
well. So the policy pays you a monthly benefit, tax free, until you're in a position to go back to work.
Okay.
If we think of what that benefit can actually do, of course, it can allow you to continue to pay your bills.
Yep.
But then in which case, it then protects any savings that you've had, because you don't have to dip into them,
Okay.
do you, to
Yeah.
support you. It protects your credit, because
Mhm.
then, of course, you don't have to, rely on credit cards or take out a loan to support you.
Yeah.
So it supports wealth. And then critical illness cover is a policy that pays out a lump sum if you're diagnosed with something critical.
Okay.
But if we think of the income protection policy, which pays you if you're too sick to work, well, then it kind of
That
does what
covers that as well.
covers the
Because
critical
with the
illness as
critical
well.
illness, no one thinks that. I know it sounds silly,
No
but
one
no one
does.
actually thinks that it's going to happen to them. Like you always
Exactly.
hear stories, or someone in someone's family gets ill or gets
Yeah.
cancer or this, but no one actually thinks it's going to be them.
And that's the thing, when you think of cancer statistics these days at the moment as well, it's 1 in 2.
Yeah, everyone,
S-
someone that you know, whether it's a friend or family member, you know
Right?
someone with cancer.
Exactly. So it's not to say that it's definitely going to happen.
Yeah.
I mean, my grandmother passed at 95 years old, and she was never diagnosed with a
Wow.
heart attack, a stroke, any form of
Yeah.
critical illness, so to speak.
That's a really good age.
Thank you. um, but yeah, so it's not to say that it's going to happen. And I think what's important to get across as well is insurance is a contingency plan.
Yeah.
It's not, something to take advantage of. And,
Mm.
it's not an investment scheme. It's something to say that I respect the money that I earn. I respect the money that I've saved, and I respect the wealth that I've built.
Yeah.
And nothing should happen to that if I fall ill
Mhm.
or if I pass away.
Yeah.
Passing away as well is definitely from a responsibility thing. Like, we are expected to pay for our own funerals.
Yeah.
In the UK, our funerals are covered by our estate. And if you think of leaving loved ones behind, and then the financial burden that's then left on them,
Yeah.
if we pass away without leaving anything behind, and then the stress that causes for them.
Yeah.
So life insurance is a bit more of a responsibility, but income protection and critical illness, definitely from a standpoint of, I work too hard for my money to then get
Yeah.
sick inadvertently, unfortunately for myself, and then have to
Yeah.
spend all of my money supporting myself because I can't work. So,
So you took that out obviously when you bought your first property,
yeah.
and then when you obviously got your son. Do you know when you speak to people about it, is it something that everyone thinks, yeah, and it clicks in the head, or do they kind of just say it? Because I was having this conversation with one of my friends, and she was like, yeah, but I don't need that. Yeah, but and I'm kind of at the stage now where I'm having this conversation with you, but I don't have any insurance. I don't have any income
Mm,
protection. And it's kind of like, I feel like most people or most women are like, we know we need this,
yeah.
but we're not actually going to do anything about it.
Yeah, yeah.
Why is that? Or what can we do to kind of get rid of
The
that
narrow, you're
mindset?
right. You're very, very right. So the majority of my clients are women, and the majority of them become my clients at a pivotal point in their life. Either they've had a
Okay.
salary increase,
Yeah.
they've bought their first property, they've maybe got married, had a baby,
Hmm.
whatever it may be. But it's usually at a pivotal point in their life that's encouraged them
Yeah.
to take that next step with becoming more responsible with their finances, let's say, or
Hmm.
more financially literate. If you take someone that's kind of in between those stages, then immediately the thought is, okay, but why would I need it? I don't have any
Yeah.
children, I don't have a property, so what am I protecting? I'm kind of okay. And I think that traditionally comes from the fact that women are more risk adverse. And
Mhm.
because there's no immediate outcome of insurance, it's a payout, but it's a payout if you've got
Yeah.
sick or if you've passed away. So I think naturally being more risk adverse and being quite optimistic, thinking, well, if I'm fit and healthy now and I take control of that, then why would I need to put this in place?
Mhm.
It's just that assumption of I'm paying for a policy and I'm going to get nothing in return.
Yeah.
But the actual fact is, a lot more providers are, having benefits that are inclusive within the monthly premium that do cater to you taking responsibility for your lifestyle, improving your health, financial well-being, mental health well-being, physiotherapy, personal training, a whole host of things. Vitality offer, for example, like 2-for-1 cinema
Mhm.
discount, free coffee. So there's a lot more incentives and benefits built into the premium. So you do get some return on your money for
Okay.
one. But I think it just goes back to, at the end of the day, you don't get insurance when you are sick. You get insurance before. It's the same way as when
Mm.
you drive a car. You don't get the car insurance once you've crashed.
That's true. And this is what I was thinking about as well, because there's certain things like you have to get car insurance. Everyone automatically will get it, but
Yeah.
like, surely I'm more important than the car. Do you
Well,
get
that's
what
the
I
thing,
mean?
exactly.
Like,
And it's beneficial for the government to make it mandatory for everyone to get car
mhm,
insurance because, of course, think about it, when two cars crash on the road, it's the impact to the street, it's the impact to who tows away the vehicles,
that's
who
true.
cleans it up,
Yeah.
etc. All of that has an impact on the council or the borough that it's within. If you pass away or I pass away, what immediate impact does that have on anyone apart from
Mm,
us, ourselves, our loved ones,
yeah.
our friends? So I think that's the difference between why it's mandatory and why it's not. But like
Yep.
you said, we're definitely more important than a car. So
Yeah. So do you know, like in terms of what you do, obviously on your platform on social media, you are very much an advocate for trying to educate people about these topics because they are important. What kind of ways do you educate people at the minute?
So definitely through social media,
Yep.
trying to create content there, appearing on podcasts.
Yep.
I then run webinars every so often,
Yep.
which will then, pick a particular topic and we'll just discuss that in depth. I then work with, say, Greenwich University. I'm a board chairwoman of the board for their enterprise challenge.
Amazing.
So work with their entrepreneurs, and when they have a competition, which they do each year in March, work with the students, and then different colleges as well, predominantly around credit, because that's the one
Yeah.
that's kind of that they have the biggest affinity with,
Mhm.
college students, and then just having conversations with them. But I think it's just the more conversations we have about finances is the more we become comfortable
Yeah.
with finances. We're very prude here in the UK. It's not often that two people
Mm.
sit on the tube and are like, "What are you earning? What are you earning?" I mean, if you go to the USA, you can get in an Uber with
Yeah.
strangers,
And
and
they're telling you
you've heard their whole
everything.
life story. Do you know what I
Yeah.
mean? But we're in the UK, we're a bit prude, and I think it's not to say that that necessarily needs to change,
Yeah.
but we don't know what we don't know.
Mhm.
And we do know what we do know, and
Yeah.
each one teach one. The minute someone knows something, it means they're able to pass it on to someone
Yeah,
else.
definitely. And that's why even my sister that's in the studio at the minute, she was meant to be at school today. I was like, this is going to be more important than what you learn at school. So
Mm.
you can definitely come. In terms of credit, then,
Yeah.
let's start from scratch because I feel like your money mindset, your financial literacy is to do with like your environment, what you've been brought up in, that
Yeah.
kind of thing. So it's like if you've not had anyone to kind of guide you or bring up these things, you don't know. And I feel like I grew up around people where like your credit score or credit was like a very negative thing or like a
Mm.
taboo kind of, or there's going to be like a brown envelope in the post today, that kind of thing. And it's
Yeah.
like from the get go, from when I was younger, I was like, I don't really know what a credit score is, don't really
Yeah.
know how to build one, but I just know it's really important that my whole life is going to depend on it,
Yeah.
essentially.
Yeah. Yeah.
So, what is a credit score?
Essentially, a credit score is the rating of your credit report.
Yeah.
Everyone has a credit report. Think of it as like your financial CV.
Mm-hmm.
Indicates how responsible you are with other people's money,
Yeah.
or how responsible you are with other financial institutions and financial relationships that you
Mm-hmm.
hold. So the credit score is the rating. I always say to everyone, ignore the credit score. Like,
Okay.
ignore that number.
Yeah.
Just because it's a universal rating, meaning that they have to rate everyone in the same way, but your credit score doesn't provide any context. So for example, you may have a higher credit
Okay.
score than I,
Yeah.
and yet I've got a mortgage. And so someone, might assume, well, how does that happen if you've got a
Yeah.
mortgage and all of your
And
mortgage
this is
payments
the
are on
thing for me
time?
because it's like growing up or having conversations with like certain family members or friends. It's like, how have you got a worse credit score, but you've got a car, you've got this, you've got that.
Yeah.
Like it doesn't make sense. So it's like logically, how do you
How
make sense of it
Yeah,
all?
and that's why I always say ignore the credit score. Think
Yeah.
of it as always credit conduct over
Okay.
credit score. So how
Conduct.
you manage your credit
Yeah.
is always going to be far more important than what the actual score says.
Mm-hmm.
And there's been like recent changes. Experian have increased their credit score rating from 999 to now 1200 because they're taking into account, like your bank account and other
Okay.
subscription payments and things like that go
Yeah.
through your bank account on a regular basis, but
Yeah.
naturally aren't a credit relationship.
Yeah.
But I still say ignore the credit score. Always think about credit conduct. And it's just, if we think about it as well, a mortgage is for the majority of people is going
Mm-hmm.
to be like the biggest purchase that
Yeah.
they're ever going to make in their
Yeah.
life. And it's certainly going to be the biggest amount of debt that
Yeah.
anyone's going to enter into.
Mm-hmm.
So I always try and educate from a mortgage standpoint, because if you're good to go for a mortgage, you're good to go for anything else,
Yeah.
bottom line is. So, and mortgage lenders, they're not bothered by the score. If you can get a mortgage with a county court judgment or a default, for example, I'm not saying it's ideal
Mm.
or it's the optimal way, to get a mortgage, because naturally your interest rate is going to be higher.
Yeah.
But if you can get a mortgage with those adverse credit elements on your credit report, then I wish I could say to everyone, like, just take a chill pill when it comes to your credit. But I get it. But it's just due to the lack of
It is
information
stress.
around
Like,
it.
even if you see, like, so for example, last year I took out a loan for something, and it was like my credit score went
Yeah.
down, and I felt that burn. But
Yeah.
then also, it's like when it comes to credit, I know that there's different platforms for different things. So, like, your
Exactly.
experience is different to your clear score.
Yeah.
So,
Yeah.
give us a bit more detail on
So
all those kind of platforms.
I feel like Experian is kind of like the Nike of the credit referencing
It's the one
agencies.
that's nice to me.
It's
I'll
the
tell you
right.
that.
And it's probably the one that's nicest to you because it's the one that takes the most into consideration. So
Okay.
if you've linked your bank account to your Experian credit report,
Yeah.
then all of those additional payments
Is that something that people should be doing?
I think so. There's
Yeah.
definitely no harm in it. But it's also to understand that it depends on who's checking your credit report and where they're checking.
Okay.
So traditionally, mortgage lenders might be checking with Equifax. And certainly in my experience, the majority of mortgage lenders will check through Equifax.
Yeah.
And what people understand is there's Experian, but then ClearScore is actually Equifax and
Okay.
Credit Karma is actually TransUnion. So they're just the free platforms that allow you to check your credit report, but with those credit referencing agencies.
Yeah.
And then there's Check My File, who is basically the platform that allows you to see all three
I was going to just say that
in one
because that can
place.
be confusing because
Right.
check this,
Check this, log in here, log in
So
there.
you would recommend, what's it called? Check
Check My File. It
Okay.
is a paid subscription. I
Yeah.
do recommend it, especially if you're going through the process of applying for credit, because then you've just got a 360 perspective of what you look like for every single agency. If you're going with a particular, credit institution, lender, whoever it is,
Yeah.
and they only use one particular agency and you don't know who that is,
Yeah.
then you've already got the upper hand knowing exactly what you look like with
Okay.
TransUnion, with Equifax, Experian. But otherwise, who wants to be paying a subscription every month? So definitely taking advantage of ClearScore and Credit Karma, which are the free platforms.
Yeah.
Yeah, you can't go wrong with those either.
I've got a question for you. So let's say someone has just found this podcast now.
Yeah.
They want to start building their credit score.
Yeah.
Let's say I'm going to buy a house next year. That is
Yeah.
actually a goal of mine. I want to buy a house next year.
Sure.
I want to start working on my credit from now. What are the best things to do, or time-wise? Like, how far in advance should you start working towards your credit before a purchase?
Before
Is
a
it a year?
purchase,
Is it
yeah.
2 years? Because usually I
Really
think
good
it's like
question.
stuff stays on there for 2 years, I'm
So
assuming.
really good question. I have a rule. It's called the 626 rule.
Okay.
So everything in the last 6 months has
Yeah.
the biggest impact on your credit report.
Okay.
Anything after 6 months tends to start to sort of like, peter out.
Yeah.
Everything in the last 2 years is
Yeah.
what mortgage lenders take into consideration
Okay.
and what they'll be looking at. And most credit lenders will be looking at, but especially mortgage lenders.
So let's say no missed
2
payments
years.
for a good
No
2
missed
years.
payments for 2 years.
Okay.
Exactly. And everything stays on your credit report
Yeah.
for 6 years. So
Okay.
626. And when I say stay on your credit report, that means if you've got a current account, a credit card, or etc. that you're actively using,
Yeah.
it will always be reported as far back as 6 years.
Okay.
If you close that account as of today, it's going to remain on there as a closed account for a further 6 years from today onwards.
Okay.
So 626, 6 months is the most impact.
Yeah.
2 years is what they're looking at. 6 years is how long everything is reported.
Mm-hmm.
I think once you can get your head around that and understand, then you kind of know what you need to clean up
Yeah.
and what you need to rectify, or how long before you might then want to go for an application for something.
So, for example, let's say if someone found you now, because I know that you offer a service where you help people
Yes.
with their credit score.
Yeah, yeah.
What would that entail? Like, what do you do within your service? So let's say if I wanted to become your client now,
Yeah.
what would that look like?
So you and I would have a look at your credit report to
Okay.
understand what's immediately impacting it
Yeah.
and then what you can rectify.
Mhm.
We'd also then have a look at what your financial goals are. So where you just mentioned buying a house. So we would ultimately work at the goal and then reverse engineer your plan backwards. So you know
Mhm.
exactly what you need to be doing right up until that point. It's taken into account things like, is there anything that you need to apply for in the
Okay.
next 12 months? Because of course, that's going to impact your score,
Yeah.
won't necessarily impact you getting a mortgage,
Yeah.
but naturally your score might drop. And it's you understanding that searches are going to remain on your credit report for another 12 months.
Yeah.
You know, how heavily are you utilizing credit? How heavily are you utilizing an overdraft in
Mhm.
comparison to your credit cards? Most people will assume that using a credit card is worse than using your overdraft,
Okay.
and it's not.
Okay.
The overdraft is the
Is
killer.
worse.
Yeah, because the
Okay.
assumption is that the overdraft, of course, it's attached to your bank account.
Yeah.
So what that the and this is why I say your credit report doesn't give any context. You know, like there's no speech bubble
This
saying
is
this
what
is
I'm
what
saying.
happened
There's
last
actually
month.
not any education of what
Nothing.
this stuff means.
Yeah, nothing
So
at all.
that's worse than your overdraft.
Definitely, because the logic is that not enough money is going into your bank account if you're relying
Okay.
on your overdraft.
Yeah.
Whereas with a credit card, that's a conscious decision. That's money available here on a credit card. You know, you're able to spend it, for example, and then pay it back next month. The
Mm.
interest accrues based on how long you take to pay it back. But an overdraft is ultimately there's not enough money in your account and you're
Yeah.
continuing to spend. The logic for someone using it feels the same as a credit card, but for someone looking from the outside in, it's there's not enough money in
That's
your
really
bank account.
interesting, actually, because I think when I was at uni, I think that's when I first got my overdraft because everyone that's like
Of course,
student,
this is the
student
thing.
overdraft,
Yeah.
get it. I was
Nat
like,
West.
do you know at the time as well? I went to Aston, I was like, I'm working at Selfridges. I was like on more than minimum wage. I was like, that's fine. I'll pay that back by the time I finish. And
Right?
then when I finished uni, I was like, no, I actually need
I'm
to
now stuck in my
think
overdraft.
this through and actually use it.
And it's
And
such a silent killer because if you think about it, if your overdraft is, say, £1,000 and
yeah,
you're bringing in £2,000,
yeah,
immediately you think, oh, okay, I'm great. But if you've got to a point where you've spent that £1,000
yeah.
overdraft, your income is immediately halved the minute it hits your bank account. Because, of
Mm,
course, the money goes towards your overdraft first, and then
yeah,
whatever's left, the surplus is then what's available for you to spend. And if you need to utilize your full £2,000 income, you're just always in that revolving cycle.
yeah,
And they can see that on your credit report as well, because they can see, you know, August, the balance was X, October, December, January, February, etc. So that's why I always say overdraft has a bigger impact than your credit
yeah.
card.
There are quite a lot of misconceptions with that because I think my mindset used to be like, if I had, because I watched people in my life take out that much credit, it ended up
Mm,
badly. So I was like, I'm not taking out anything. I'm not doing anything. And I feel like that's where I was like, how do I still have a shit credit
well,
score? Like,
that's
I
the
just
thing.
logically did not understand it. I was like, I've not got anything.
Well, that's the thing. If you think of your credit report as like a financial CV, if you're
Yeah.
going to apply for a job, you need experience. So if you've
Yeah.
got no experience, no one's going to hire you. The
That's
same way, if
true.
you've got no previous credit relationships for someone else to go by, then their argument is, how can I trust you with my money when I've got no indication of how you've operated with someone else's money?
Mm-hmm.
So that's also why people who stay away from credit also then have a low credit score.
Yeah.
And then, of course, theoretically, there's not much credit conduct to go by either.
Yeah.
So it's about finding that sweet spot. What's financially responsible for you? Because
Mm-hmm.
in fairness, not everyone wants to have access to a credit card. And especially if you're someone that's quite accountable and you know that, okay, if I've got access to a credit card, I may want to spend it.
Yeah.
You need to find that sweet spot between credit that's available that I can take advantage of responsibly,
Mm-hmm.
even if it's just little things such as mobile phone bill. A lot of the time, if you're renting these days as well, the landlords are in a position to update your credit report with your
Okay.
rental history,
Okay.
especially those who live in housing associations or council. They're in a position to update it. A lot of the time, people think that utility bills don't end up on your credit report. They
They
do.
do.
Thames Water,
Believe me,
EDF,
they
etc.
do.
And then you know what it is? Those are the ones that are notorious for getting it wrong.
Yeah.
Unfortunately, your broadband, so all of those small necessary things that are part of your, month to month expenses that you don't even really look at can be beneficial for you having, appear on your credit report.
Yeah. Let's say then, if I have no credit, like I just said,
Yeah.
what would you say I could do to try and build my credit?
So I think if you've got no credit, then let's definitely look at all of those things such as broadband, telephone bill, etc. What's necessary? We're not applying for things just for the fun of it.
Yeah.
Then my next port of call would definitely be some form of credit card.
Mm-hmm.
Um, it's not to say that I'm not a fan of credit builders. So, for example, brands like Lockbox and Moneybox and etc. Companies like that that do help to build your credit. It's not to say that I'm not a fan of those,
Mm,
but I think those have come about when people are in absolute despair and they don't know where to go. So I'm a fan of those in those scenarios. If
yeah.
someone's like, I can't apply for a credit card and I want to show that I'm responsible, I literally have no clue and I don't know what to do.
Yeah.
Those are brilliant options. But if you're someone that does have a level of financial responsibility where you are in a position to maybe apply for something, then ultimately, but if I'll be honest with you, it's always going to start with your income and your expenses.
Okay.
Show me someone's credit report and I can tell you exactly how they manage their money.
Okay.
So that's where I always say is where it will start. How much money have you got coming in? What are your expenses going out? How responsible are you? What do your variable expenses look like? Because sometimes it's easy for people to say, yep, I'm earning £2,000 a month and I've got £1,500 going out. Okay, but where? Like
Mm.
where's it
Do you know
going?
what? I think that happened to me because my grandma, she's a business school manager, so she
Mm.
deals with all their finances and stuff. And speaking to her about my money, she's like, "Yeah, but have you actually had a look where you?" And there were so many subscriptions that I was paying
Right?
for. There was so many, and I was like, "Where is this money
Anyone,
going?"
this is the thing. Anyone with an iPhone might think, oh yeah, I'm paying for my
'Cause
Apple
I used to not
Music.
even check
You
like
would,
my bank statements.
yeah.
Like you just see it coming out,
And
and you
they're
just
so
think,
minimal,
"Okay,
2.99, 4.99, and they come out
yeah."
randomly. And this is the problem with subscriptions as well. Love them but hate them. Love them from the convenience
Mm,
element because you've got access to something immediately. You don't have to worry about it. But a subscription is not a direct debit. You've made no official agreement to collect the money from this account on this day.
mm.
You're not in control. You can assume that they're
So
going to,
some of those subscriptions will they show up as missed payments then?
they won't show up as missed payments because it's not a credit agreement.
Yeah,
But it's just the annoying thing that they will come out of your bank account whenever. And of
yeah,
course, if you're down to your last amount of money, the good thing about it as well, however, is that accounts, when it comes to your bank account, if you've got minimal income inside there, they will always prioritize the direct debit
yeah.
over a subscription payment.
Hmm.
But it's just so annoying. I've had it happen to me where, I've meant to cancel, like Now TV or something.
Yeah.
I've been sitting in church and it's a Sunday and then it's like Now TV has been what?
Is that they're
Who
thinking
is
what?
awake? Who is working? What are you guys doing? Yeah,
Yeah.
they're relentless. And I think that's where a lot of people trip up is just multiple subscriptions, bleeding their income, bleeding their money, and then just not knowing.
So I want some advice then, because I feel like this was me maybe 2 years ago. I would
Hmm.
say that I was kind of, what's the word? Abusing credit, maybe. Do you know,
Okay.
like when it comes to, like I'm a girl, like I love well, I
Of
used to love clothes.
course.
I used to
Yeah.
love designer. I think it was because I worked at Selfridges. Like all of that was just the discount was good, 50% off. You can't
It
say
was
no.
50%.
Yes. Yes.
Oh.
But yeah, it is used to. I've not bought anything. Um but yeah, I just feel like I used to abuse it in a way of like when it comes to clothes and fashion and social media now, it's like everything's on Klarna or this is on this. And I think that used to be me like 2 years ago.
Mm.
Um, but now I feel like, what do you do? Because if you're someone so I built up a great credit score and I was like, yeah, and then I got like credit card, this. And
Yeah.
it's like, how do I then not abuse all of this? Like,
Yeah.
not abuse my credit.
You got to match it to your lifestyle. So
Yeah.
I would always say, having a credit card that is relevant to your lifestyle, for example, reward points. If you're someone that shops in Marks and Spencer's a lot, get
Yep.
the Marks and Spencer's credit card because
Okay.
at least then, by you utilizing the credit card, there's some sort of reward or there's some sort of perk. But the reality is, however, if I'm going to be totally transparent,
Mm-hmm.
there's no benefit that a credit card offers that is going to outweigh the use of it.
Yep.
You're never going to be able to spend £300 on a credit card and
Mm-hmm.
earn £300 worth of rewards
Yeah.
back, for example. It's always a give and take.
Yeah.
So I would say if you're in a position to utilize a credit card as if it was the same money that you would then spend. So what I mean by that is I need to spend £200 a month on my credit card, for
Mm-hmm.
example, but I've got the £200 disposable income to also pay off the credit card. It's just a choice of account. It makes no difference whether you spend it from your current account or whether you spend it from your credit card, because at
Mm.
least that way you are responsible. But first thing is making sure that you have credit that matches your lifestyle
Yeah.
rather than just multiple credit cards just for the sake of it. The second thing I would say as well is anything that is deferred or that you have to pay in 3 installments or
Mm-hmm.
etc. you have to think about why you are making that purchase.
Yeah.
Now, I'm not going to say that I
Because I
don't.
feel like this is a lot of girls, like
When if
me,
you
some
think
of my
about it,
friends,
Klarna's even the branding's pink as
like
well, so
yeah, like the
it's
whole
catered to the
population.
women.
Yeah.
But I would say with Klarna, and I'm not saying that I'm not a fan of it,
Yeah.
because I think, like you said, as women, if you've got a birthday, no one wants to be buying online, ordering 3 different dresses
Yeah.
only for one to fit, and then we've got to wait,
Or even like
21
flights and
days.
stuff. Like I love doing a
Well, that's the
flight and
thing.
stuff on
Flights,
Klarna.
exactly. There's a level of protection with credit cards
Yeah.
as well. So, like what I was saying with Klarna, it's about how you're able to use it responsibly. Like I said, as women, no one wants to be ordering 3 dresses and then waiting, like 21 days for the refunds on the other 2 that you had no intention of wearing.
Yeah.
But are you going to be responsible? Are you going to return those other 2 dresses?
Mm.
When it says pay in 30 days, is it because you can't afford it now, but you think you can afford it next month? But then why can't you afford it now?
Now, is
You
it
have
probably
to
going
be
to be the same next
is it
month?
not the same? Because if
Yeah.
you're earning the same amount of money every single month, what's the difference between this month and next month? So you do have to ask yourself those hard questions. But again, definitely like what you were saying in regards to credit cards, there is obviously that element of security, because any money that goes through your bank account, there is the assumption that you are well aware of the transaction, you authorize the transaction. With the credit card, it's always in favor of yourself. So if something goes wrong, things are cancelled, there's some element of fraud or a scam or etc., there's the security, because the credit card isn't really anyone's money. It's almost
Mm.
like it's not real money.
Yeah.
So, but it's urgent on the right side of that, because whilst it might not feel like it's real
It
money,
definitely
it
is.
definitely is
You've
when it
got to
comes to
pay for
paying it
it
back.
somehow.
Exactly.
Yeah. So I want to get to know you a little bit more then in terms of
Okay.
like your own journey, because obviously you have built a very good platform for yourself, you're a keynote speaker, public speaker, that kind of thing. For someone like yourself, so you didn't get started in insurance. This is like a
Yeah.
whole new world to you in terms of like learning it. It can seem very like overwhelming if you don't know anything
Mm,
about it, or
yeah.
someone within that space. How would you say to kind of build that platform? And I'm only saying this because I have a property background and I
Yeah.
stopped posting property content because I feel like with certain industries, people will be on the internet saying whatever it is and trying to make people believe whatever. And it's like,
Yeah.
that kind of put me off. So I did Airbnb before as well, and I'm listening to people say this and this and this, and I'm sat there thinking, but you've not even took off the rent. You're not this. You're not that. So
Yeah.
it's like when there's that many people in an industry,
Mm.
how can you build an authentic but real platform like yourself, like what you've done?
Okay. So I think 3 things. First things is there is definitely such a thing as performative intellectualism, meaning that everyone wants to
Mm,
jump on top of a soapbox and
mm,
sound like they are the authority in that space,
yeah,
and they're just doing it for traction.
yeah,
They don't even work in the industry to be able to support people beyond that, like, that follow, that
yeah.
save, that whatever. So there's definitely that. And if you can block that out, and I say this to you as the same way I say it to myself, if you
Mm,
can block that out, then you're already one step ahead. The second thing is, when industries do feel really saturated, I would say find a niche.
mm-hmm.
So even, for example, like myself, my thing is, it's the whole pathway to wealth, specifically the pathway through property. So if we think about it, you have to start with credit
Yeah,
in order to be able to get a mortgage.
yeah.
You've got a mortgage, you obviously then need insurance, and then the latter end is then estate planning. So trust, wills, power of attorney. And that's basically my whole career.
Mm-hmm.
In the last 6 years, the amount of times that I have itched and I've picked up the book, I've got all of the paperwork at home. The amount of times
Mm,
I've gone to study as an independent financial advisor,
yeah.
study as a mortgage broker, study as this, because of course the industry, naturally, when you hear all of these people talking about these things, you think, oh gosh, should I be speaking about this as well? And is my voice as credible or less credible? But I could say, if you can find a niche
Mm-hmm.
that is your baby to speak on,
Yeah,
then you're absolutely fine, because we can't be everything to everyone.
that's true.
So if you can find your niche, so even if it's property, but it's specifically, like you said, Airbnb, or it's specifically buy to lets, it's specifically residential, it might be interior design. They're all relevant to property, but it's
Mm,
just you tackling that one particular area.
yeah.
It might be property, but specifically for women between the ages of 25 and 35.
Mm-hmm.
Again, so specific. And then the last point I would say is, be bold. If people are talking
Mm,
crap, call them out. And I don't mean
mm,
like name them and shame them. But ultimately, if you're recognizing that there's content online that is not accurate, that means that you're seeing a gap.
yeah.
Because why is it that someone can follow someone who's got 20, and this is the problem as well.
Yeah. I was just going to say, I think it's more like when I started, obviously I started going to events and stuff at like 20 years old. And then you've got this person, like, be my mentor, be my, let me person, be this coach, be this, be this. And I'm just sat there thinking, like, you genuinely don't know who to go to. And then it's like, you'll go to someone, have a bad experience, or someone will go to, and then they'll be like, the whole world is like over, like, don't do that at all, don't get a
Yeah.
coach at all. But I'm someone where I feel like investing in myself, there's never been a time
Mm,
where investing in myself hasn't worked out. Do you get me?
exactly.
So I feel like even to do with finance and stuff like that, in my mind, that is more important than anything that I'm going to pay for, any holiday that I'm going to pay for.
Yeah,
Do you get what I
yeah,
mean? Because essentially,
absolutely.
how I would, let's say, set myself up with you, or if someone was to come to you as a client, that is going to be more beneficial and essentially lead to them having more holidays or more. Do you know what I mean?
Definitely. And I think that, so to touch on that point, I think definitely investing in yourself, because even if you've worked with someone and it hasn't worked out,
Mhm.
that failure is a lesson.
Mhm.
And in fairness as well, it's we're living in a time where it's the easiest opportunity. I know other people will say, no, it's not. We're living in a time where it's the easiest opportunity to make money online.
Yeah.
Ultimately, anyone can show up with a digital product, a website, a
Yeah.
funnel, a service, a product, etc. I'm not
Mhm.
saying that if you're building a credible business with integrity, I'm not saying that's not
Mhm.
hard, but definitely the times that we're living in compared to 20 years ago with the
Yeah.
use of social media, it's easier. So it's so easy with what I'm saying to then fall into a trap of being, sold to
Yeah.
by someone who then
Because
claims to
there is a
be.
lot of great salespeople out there.
Exactly, 100%. But it's then to say, like I said, everything is a lesson.
Mhm.
So if you feel like immediately, okay, this isn't working out, this isn't beneficial, etc., and you're in a position to cut your losses, but you got to cut your losses and then look back and say, okay, right, where did this go wrong? Why didn't I appreciate the experience? What is it that I'm looking for? I think you have to do a lot of self-reflection, because you can only learn if you know how you want to be taught.
Mhm.
Um, but then to say that as well, how I like to work with clients is definitely taking an understanding on what works for them.
Mhm.
So other people can go online and they can listen to, the 50-30-20 rule, which is
Mm.
ultimately like a budgeting technique. 50% it goes on your core expenses,
Yeah.
30% goes towards your 50% towards your needs, 30% towards your wants, and then 20% to either savings or debt. That's not going to work for everyone.
Mm.
That's not going to work for the single mum who's got 3 children, who's making ends meet, but that fraction is less than 20%.
Yeah.
That's also not going to necessarily work for someone who, their only expense because they're living at home
Mhm.
is a proportion of rent to their parents
Yeah.
and maybe their phone bill. How do they now decipher 50% towards their needs and their wants and 20? No, they're in a position to save and invest and do a lot more. So I think it's really understanding what the client wants to get out of it.
Mm.
I think having goals is the most important thing. Otherwise, what are you working towards?
Mhm.
YOLO, fantastic. Everyone wants to live every day as it comes and be happy, but we got to have something to work towards. Otherwise, we've got nothing for it to be measured
Mm.
by. So,
And I think when you were saying that, like, everyone speaks about generational wealth, but I think only because I'm seeing stuff in my own family now, it's like, how do you actually pass that wealth on
mm,
generationally?
yeah,
Like, if it's not set up correctly, you
exactly.
could just lose everything. So I think it is really
100%.
important to kind of get that coaching. Would you always say that you were like someone to be a coach? Like, how did you kind of come about it? Or
No, funny enough, no, not at all. And I think it goes back to like what you were saying in terms of the industry and me just spotting gaps, I would
yeah,
say. I think definitely working within fashion. No,
no.
not in the slightest. Like I never wanted to be a stylist, which if you think about it is,
So I'm going to ask you a question now off the
okay,
back
go
of it.
on.
You know, when you was doing fashion, what did you want to do with fashion?
I loved marketing and PR.
Okay.
Branding, marketing, and PR. And that's kind of so I studied fashion promotion, which back then was basically fashion marketing.
Yeah.
And then I worked with small brands, ultimately scaling their sort of marketing presence, relationships with like Selfridges, Harrods,
Okay.
etc., whether it be like a pop-up or a one-off collaboration, etc. So that I loved. And then I did odd things here and there. Like I worked on Nicki Minaj's styling team when she first
Love
came to the
that.
UK. I've done Fashion Week. I've worked with magazines. So I've done loads of different things, but marketing was my baby. But funny that you say that in terms of wanting to be a coach. No, I didn't ever think that's the space that I wanted to operate in, but I definitely didn't feel enough job satisfaction working within
Mm,
solely marketing. I felt like I was a number within a business and was supporting the business, but what impact
was you having?
was I really
Yeah.
having? Don't get me wrong, I could spend hours on Pinterest, hours on YouTube watching all of the
Yeah, I'm the
runway
same.
shows.
Exactly the same.
Still love it, and it's still a passion of mine. I'd love to have my own collection one day. So still
Mm.
love it, but it was just, when you think of spending like between the hours of 9 and 5 and an hour for lunch,
Yeah.
and when you have to do overtime or get in that bit early, how much job satisfaction was I getting. So maybe inadvertently in the back of my head, maybe
Hmm.
that's what I was leaning towards in terms
Yeah.
of impact and coaching. I don't know, but it wasn't ever a conscious decision.
Do you know, like, out of your journey, obviously, where you currently are, like, what are you most proud of, or what have you enjoyed?
Getting up every day.
Yeah.
I think
I love that, because the last person that I just had on as well, like, I love people that just love their life and waking up.
yeah, just getting up every day, being able to enjoy what I do. I think I'm definitely at a point where I'm quote unquote unemployable. I
Mm,
can't imagine going back into like a
yeah.
steady role. But like I said, at the same time, I love that. I love that I get to be able to build my life on my own terms. I've got a 6-year-old, little boy. I love being available to take him to football, gymnastics, swimming, all of
So
those
you're one of them mums
extra
that are out the house all the time,
extracurricular
extracurricular, yeah.
activities. Yeah, but at the same time, I love being able to have conversations with my clients. Like some of my clients have been with me for the last 6 years. Like I've
Mm,
seen them be single, get married, have the first baby, have the second baby, buy the house. And I'm like, even though I'm just doing the insurance, I'm a part of that journey.
yeah.
So I think, yeah, definitely being able to get up every day and do what I do, thoroughly, thoroughly enjoy it.
No, I love that. Any kind of advice for the girls then? So let's say, what do you think? Because my audience is mainly like women in their 20s and 30s,
Mm.
to do with finance, insurance, credit. What advice would you give to any kind of young woman?
I think insurance, I would say definitely have a conversation
Hmm.
ASAP, because ultimately insurance works when you're healthy. It doesn't work when you've already got sick.
Yeah.
The earlier you get it, the more cost effective it is.
Okay.
Getting insurance in your 20s is so much more cheaper than getting insurance in your 30s or your 40s. Also, it's the one bit of financial literacy that you don't have to learn. You don't have to learn what to
Yeah.
invest in or what to trade or which, ISA account I should be putting my money
Hmm.
in. No, advisors like myself, we take care of it all for you,
Yeah.
but you're just that little bit more financially literate.
Hmm.
I would say with your credit, get familiar with it,
Hmm.
understand it, and then also then get familiar on any financial goals that you're then trying to achieve. And then I think the last thing would be just, again, what that path to wealth, if you're looking to build wealth, looks like.
Hmm.
What financial resources do you need? And get into grips and understanding them,
Hmm.
because traditionally women are far more risk adverse. There's statistics at the moment that show women are coming, they're joining the property ladder a lot earlier now than men are. But
Hmm.
at the same time, there's a massive investment gap. So whilst we say that
Mm.
they've got thousands in the bank that we don't have,
Mm.
because we're still coming to the party late. So I think just the quicker we get an understanding of the financial resources that we need and want,
Mm.
and then we know what to look for.
Yeah.
Otherwise, going online trying to decipher through what financial literacy is, it's a minefield.
I think a big part of that for me as well, like the most that I've learned has just been saying, I don't know anything. Like,
Exactly.
I'm not an expert, I don't know anything.
Yeah.
Let me go and look, let me go and learn, let me go and the willingness to look stupid and not know something, I
Right.
think,
And that's the thing. And
especially,
is it
yeah.
even is it even looking stupid? Because this is the thing. If everyone knew everything, I'd be out of a job.
Yeah.
Do you know what I mean? So is it even looking stupid? But like you said, it's just understanding that if I don't know something, there's an expert who does.
Mm-hmm.
And like I offer all of my calls, they're free. Do you know
Mm.
what I mean? Like the discovery calls for insurance and etc. So, and there's so many other financial advisors that I know as well that offer that first 15-20 minutes.
Mm.
Go and take advantage of them. They're free for a
Yeah.
reason, So, and then at least you've walked away
Definitely,
with
girls. So you
something.
better go and pick up your free discovery call with Ella.
And then I know we said about a discount as well if obviously
Yeah.
anyone wants to book a
So
one-to-one.
we are going to figure that out. I'm going to put that in the episode in the comments and stuff. And when it comes out on social media, I'm going to do that because we're going to work on that. But yeah, I
Absolutely.
definitely think it's something that I want to do
Yeah,
personally. I need it. And just everyone, like my audience, I've got so many friends who have businesses, entrepreneurs, like it's something that you need,
yeah.
like definitely. But no, thank you for coming on the episode.
Thank you for
I
having
really,
me.
really enjoyed
Me
it.
too.
So yeah, girls, don't forget to like, comment, share, subscribe, follow on all our platforms. We really, really enjoyed having Ella on today, and to get bigger and better guests on this year, which we hope to do. We are going to want that engagement from you. So yeah, thank you, girls. I will see you on the next episode. Bye.